Is it time to celebrate? Bitcoin has hit a new all-time high, but there are some reasons to get potentially worried, and this chart here is one of those reasons. This is a very long-term price chart of Bitcoin, and it connects the price tops very accurately. Now the line is nothing scientific, it's just a curved line, but for whatever reason, those 1, 2, 3, 4, 5, 6 price tops all align perfectly on this white line. And when we zoom in here, then we're getting to something rather ugly. There's a historical resistance at 111 to 112k. Through all of Bitcoin's lifetime, we have never gone above this white line. But some things don't add up here. Historically, when we had been close to that line, there was a lot of attention on crypto. Everybody talked about crypto. It's all about selling Bitcoin when everybody wants to buy Bitcoin, when everybody gets hyped about it, and buy it when nobody talks about it. The issue is that right now the price is very high, it's close to that line, but the attention on crypto is not high. That's something we have never seen before. Have a look at those horizontal lines. So one in December 2017, one in March 2021, and one in November 2024. We had been very close to that resistance line in all three of those occasions. So December 2017, that was over here. This is the number of search queries on Google for the term Bitcoin. The price was high, search volume was high. Then we've got March 2021. Again, the price close to the resistance. And again, search interest very, very high. Then November of last year, again, quite a lot of search interest. Now we are low on the search interest, at least in comparison in the last 3 years. But again, the price is extremely high. So it seems like it's not the masses that are buying here. It's not retail that has suddenly woken up and that wants to buy Bitcoin again. It seems like it's the institutionals. It seems like it's the heavyweights that are getting into Bitcoin. That's probably what's driving up the price. How else can the price appreciate when nobody's looking at it? And we can also clearly state that this is a Bitcoin driven rally. This is not just a crypto rally that is also including Bitcoin. Bitcoin is actually leading this rally for quite a while. And we can make that statement because of this chart. This is the Bitcoin dominance. How much of all of crypto is in Bitcoin? And this is rising since September of 2022. Currently, 64% of all of cryptocurrency's market cap is in Bitcoin. Historically, we saw an altcoin rally whenever the Bitcoin dominance was close to 70%. We are not yet there. So when prices are going up right now, it's all because of Bitcoin. It's not because the altcoins are pushing up Bitcoin as well. Now, does this mean we should now sell most of our Bitcoin? We are that close to this historical resistance. Is there a potential chance that we could go above? I think there might be. It's not the obvious answer when looking at this chart, but again, when currently the attention on crypto is rather low and we're hitting new all-time highs, then maybe that attention will return and push us even higher and finally break this long-term diminishing returns trend. Now, I've talked about in the past how much higher I believe Bitcoin will go. What we're seeing here is the stablecoin dominance. So how much of all of crypto is currently in stablecoins? This is peaking at 9% and bottoming at 5% for the last 1.5 years. We can clearly see, so that's the stablecoin dominance at the top and the Bitcoin price at the bottom. We can clearly see how there's an inverse relationship. When the Bitcoin price tends to go down, so it goes from 72k all the way to 52, then the stablecoin dominance is going up. And vice versa. When the stablecoins get deployed, the dominance is going down and the price is going up. And currently, we are not yet at the 5% mark. So again, another indication that there's more money on the sidelines that could get deployed that push us much higher. And so we already made this analysis at the beginning of this month, and we made this comparison to the deployment in November of last year. If we see the same kind of price development of Bitcoin during the stablecoin deployment as in November of last year, we should see Bitcoin hitting around 140k. This horizontal line over here, that's the big resistance that we see in this long-term chart. So if we're able to break this, we are off to the races. Another 20% in BTC are definitely possible at that point. If we bet our money against a trend that has been established since the beginning of Bitcoin's lifetime, then we need to have strong reasons to still be risk on. Buying during prices like this is definitely a contrarian move. But yeah, fundamentals look great. This is the daily inflows into the Bitcoin ETF. So the ETF is scooping up more and more Bitcoin over time. For the last month, pretty much every day was positive. We see that the balance that's held by the Bitcoin ETF is at an all-time high. So this continues to grow quite steadily. And that, of course, also shrinks the liquid supply and pushes up the price long term. The long-term holders are also buying. And this is actually one of the main reasons why I believe we will see this long-term trend finally break. That's why I think we will hit the 130, potentially 140K. The long-term holders had been phenomenal at timing the market. They sold at 72, 73K. They then bought back in at around 52K. They then sold again at around 100K. And now they are buying in to a degree we haven't seen for a long time. So the smart money was able to time the market properly, and now they're betting on rising prices despite this ugly resistance. And so here's what I'm currently looking at. I'm personally heavily invested in Bitcoin. And what I'm doing is I look at what is the dormant Bitcoin doing? The Bitcoin that hasn't moved for a while. Does that Bitcoin suddenly move? If the answer is yes, then I might sell as well, right? If the diamond hands become paper hands, it might make sense to also consider taking some chips off the table. So that's this indicator here, right? The value days destroyed. If a lot of dormant Bitcoin suddenly gets moved, this indicator goes up. And this is a quite nice indicator to at least get an idea whether or not the market is heated. It doesn't always flash at the exact top of the market, but it definitely shows when the bull market can slow down. Currently, that value is very low. So the dormant Bitcoin stays dormant. There is no movement out of those cold wallets. Of course, I will also watch the stablecoin dominance. And in the end, even if we go to 130 or 140K, it's not going to change the overall picture that dramatically. This is the extent of a break we are looking at. We can start redrawing the line to a degree. And yes, it will not fit as well to prior peaks, but the model will still serve a purpose. Don't understand me wrong. I do believe that some people are going to take profit here. This is simply a historical opportunity. But I do think that there's still positive momentum and the attention on crypto is still low. There is still a lot of upside potential from here. And long-term, Bitcoin is going up. Long-term, the market is expanding. And because of that expansion, I believe that the expected value of being in Bitcoin is currently positive. Nobody knows what's going to happen, but we all work with probabilities. And I think the probability of further continued bullish prices is higher than that we're going to massively crash from here. We might go down to 100K, that's fine with me, but I don't think that we're going to enter a bear market from here. I don't see that coming because again, prices are high while attention is low, while there's still a lot of money on the sidelines that's ready to get deployed. Now here's something very important to understand. Crypto is highly correlated, as in when the market tends to go down, everything goes down at the same time. There's very little variation. This is true for the bear case, but it's also true for the bull case, as in most things go up at the same time. There seems to be not so much benefit in diversification, as in it seems to not really matter what kind of token we buy. If we have 5 tokens or we've got 20 tokens, the portfolio tends to move in the same direction anyway. Now the reason for those synchronized ups and downs in the market cannot just be money flows, because the money is flowing in and out of the overall space relatively consistently with little volatility. What we've got over here is the stablecoin market cap. And since October of 2023, we tend to go up over time. So there is money getting into the system. People deposit their fiat currency, say on a centralized exchange. The centralized exchange then sends it over to a stablecoin custodian. The custodian holds the funds in a bank account and then mints the stablecoins on the chain. And we can see that minting, but also the redemption on this chart. So the volatility that all prices go up or all prices go down, it's not caused by money flowing in and out of the system as a whole. Instead, I believe it's caused by the swapping activity. So people going risk on or going risk off. So it's not the market as a whole expanding or contracting, it's the participants within the market that swap. And we can see that swapping activity with much more volatility here. So this is now the stablecoin dominance. We're not looking at the stablecoin market cap, we're looking at the stablecoin dominance. How much of all of crypto is in stables? And in the last 1.5 years, this tended to move in a range between 9% and 5%. And now compare that stablecoin dominance with the Bitcoin price. When the stablecoin dominance is low, it means the Bitcoin price tends to be high. When the stablecoin dominance is high, it means the Bitcoin price tends to be low. So there is somewhat of an inverse correlation. When people deploy their stablecoins, or when they're swapping from risk off to risk on, when stablecoin dominance goes down, prices tend to go up. And so because of that overall effect of market synchronization, because of the high correlation, things move in the same direction at the same time, it's not a good idea to just look at US dollar prices in order to make a good decision whether or not to buy or sell an altcoin. Because charts like this are also influenced by the overall market swapping activity, not just by the swapping activity within the altcoin. So for example, this here, right? This is Dogecoin. And who would have thought that Dogecoin already peaks at 46 cents when in the past it peaked at 56, 57 cents? Who would have already anticipated the peak earlier? How could we figure that out? Here is how we can figure that out. This is Dogecoin's dominance. And here those two tops align very nicely. And so a dominance chart is simply a chart that looks at the current market cap of an altcoin relative to all of crypto. So that way we remove the ups and downs of Bitcoin or of Ethereum. We are just looking at the relative performance of the altcoin versus the rest of the market. And again, that tends to trade in ranges. And that's how we can find out how the second peak should actually happen earlier in US dollars, because the dominance was already at historical heights. But check out this, right? This is Shiba Inu in US dollars. But here's Shiba Inu's dominance. So we do have a quiet constant trend. Over time, Shiba Inu tends to underperform the rest of the market, and when we are high on the trading range, it might make sense to bet on falling prices. When we are low, we could potentially buy, but of course it's always somewhat risky to buy low when the overall trend is also bearish. So I personally prefer, when there's a declining trend, to look for short opportunities, so to bet on falling prices when we are high, and when we are in an upwards trend, to buy the dips. So when we're in a bull market, we buy the dips. When we're in a bear market, we short the top. And so Shiba Inu underperforms the market over the long term. So instead of trying to fish for bottoms here, isn't it better to just wait for the next short squeeze, to wait for the next rally in the price, to then bet on falling prices? Then the time is also on our side. Even if we see a bit of a spike above the regular trading range, we can just wait it out, because the overall trend is in our favor. That's not necessarily true when we buy, right? When we buy low in a declining trend, we might not find the exit on time and then have to sell again, potentially lower. Another example, here's Chainlink. And what we see over here, that's Chainlink's dominance. So just according to this chart, it might make sense to potentially buy some Link over just Bitcoin or Ethereum. Historically, it's rather cheap. Now, there are two central reasons why I like those relative valuation charts and those dominance charts. The first one is that we can actually see what happens specifically with that token, completely independent of the overall market. But the second reason is by plotting relative valuation charts, so say cryptocurrency A versus cryptocurrency B, we tend to see less volatility. We tend to see the trends clearer. For example, over here, this is the Ethereum price in US dollars since February of 2021. There's no clear trend. It's not necessarily easy to figure out when to buy or when to sell. But then we've got here Ethereum relative to Balancer. I like to look at this chart because it gives us two nice points. First of all, the overall volatility is rather small, but secondly, the gains are also extremely consistent. So this is an outperformance of 5,400%. This is how much Ethereum outperformed Balancer. And again, relatively speaking, with not that much volatility. Getting that much performance in a such consistent manner without having to time the market actively, that's quite unique, right? This is a risk to reward that we can only get with relative valuation plays. We can't get this just by buying something in US dollars. And again, the reason why everything in US dollars fluctuates so much is because the market as a whole goes risk on and risk off all the time. And that creates massive additional volatility. But we can get rid of that volatility. We can actually make money by buying this. Now, we don't just buy this, we have to set up a long Ethereum and a short balancer position. So to get this performance, we have to do a bit of quote unquote financial trickery. But yeah, why do we see such consistent outperformance? The reason is that balancer over time tends to have an expanding token supply. And a lot of that additional supply goes to liquidity mining. So to a lot of people that just get continued allocation to the token that then sell it off over time. And so this then differentiates the winners from the losers long term. The people that are willing to take one step further, they're going to look not just at the next 100x meme coin, it's likely going to go to zero, but that actually figure out what are the dynamics within the market and how can we profit from those dynamics. Those people tend to do better than just the people that buy and hold Bitcoin, for example. I have made dedicated tutorial videos on the topic. First of all, how do we even plot those relative valuation charts? How can we look at them? There's an entire tutorial section just on how to use TradingView in a proper manner and seeing the things that most people don't, right? Most people just look at things like this. This is not giving us any edge. But then there are also videos on how to actually execute those trades. How can we gain from relative valuations? How can we set this up? How can we continually make money with comparatively little risk? Now, most people here on YouTube are not willing to share their own performance, but I'm okay with doing that. I'm okay to share how much money I'm making on average over buying and holding Bitcoin. Because this is again where the big differentiator is. Everybody can get Bitcoin's performance, but actually the art in this is to make more than Bitcoin. If we take the time to trade actively, we have to outperform the benchmark. Now here are the monthly returns that I have made over buying and holding Bitcoin. So every data point is a month. This dotted line here is the 12-month moving average. And when we average out all of those dots, the monthly alpha over buying and holding Bitcoin for me is 2.1%. Now that might not sound like much, but that compounds over time. And then especially if we also add more money in the portfolio over time, we dollar cost average in, we have a quite nice smooth growth curve. So here's my active portfolio with trading and dollar cost averaging. And I hope that over the next 2 to 2.5 years, I'll be able again to double that portfolio. If we of course use leverage, we can make much more on a single trade. But I'm super cautious. I take very small bets. For example, have a look at this. I'm sharing my own trades. This is in the Gerhard Trade channel, and I opened again, based on relative valuations, a short of the Donald Trump meme coin. Trump relative to Solana was quite high, and it started to come down. And then our members also entered. They also had some leverage in there, so this was some gains. I waited a bit longer, closed this then at 141%. But because I only use 1 or 2% of my entire portfolio on a trade like this, the average alpha per month is only 2.1%. But if you're willing to take on more risk, you can of course grow much faster. Actually, our members do exactly that. So here's the channel, share your wins with some leverage and proper market timing and still reasonable risk management. There are several 100% in single trades easily possible. And so I think it's very important to forget about price targets, as in can Ethereum hit $4,000 or can Dogecoin hit $1, etc. Those kind of things don't really matter. What really matters is the relative performance. Capital within crypto moves from asset to asset. Attention moves from asset to asset. So there is all of the capital in the space. Sometimes it is risk on, sometimes it is risk off. But what really matters is where is the capital flowing to and where is it going away. And then all we need to do is to trade the relative valuation. It's much easier to make money that way. Again, would you rather hold this or would you rather hold this? And so yeah, feel free to check it out. It's currently $125 per month. You are locking in that rate. So when we come back to the 165 again in a few months, then you will still continue paying the 125. Whatever you're paying now, you will continue to pay. I will not increase the rate for everybody that's signing up now. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated. here as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. There should be also somewhere a pop-up here on the right where you can click directly. It will lead you to the website. So see you over there. Cheers.